Welcome to Remarkable Retail Podcast, Season 11, Episode 2. I'm Michael LeBlanc.
And I'm Steve Dennis.
On this episode, we're talking about the future of global luxury retail with two guests that will be in Abu Dhabi at the Shop Talk Luxe event, January 27-29th, that our friend Ben Miller is organizing. Amit Kaswani, Chief Omnichannel Officer for the Chalhoub Group, and Stacie Henderson Capece Minutolo, Chief Marketing Officer, America at Tod's Group. Steve, not our first guest from the impressive Chalhoub Group, and I believe you may be the owner of several pairs of Tod's.
I'm not going to commit to several because they are a little pricey, but they're pretty wonderful. But yeah, I would say my favorite pair of shoes ever is a pair of Tod's loafers that I bought quite a long time ago now and have been trying to lovingly take care of them so I can enjoy them for even more time.
Slightly new format for the show with our take on the events of the week coming up first, as always, then a great interview, and then we'll be back with something that struck us as particularly remarkable for the week, and then a peek around the corner. So stick around after the interview. That's what's new. We'll be back after the interview with more great content coming up. All right, let's jump right in. News of the week: tariff turmoil. We see the judges saying no. You got to give all that money back, and I guess Trump's going to appeal it to the Supreme Court. It's just more uncertainty, right?
Yeah, every time we seem to be getting closer to a little less uncertainty, something seems to happen. So this was the appeals court overruling not all of Trump's tariffs, but listeners may remember back in the spring when the tariffs were first announced, we had a conversation about how, to me, not as a trade lawyer, they obviously seem to be outside of the president's authority. The legislation is actually quite clear. There doesn't seem to be a ton of interpretation as to under what situations the president can implement tariffs versus what the Congress has to do. And really, the only exception is in the state of a national emergency, which, of course, Trump claims there is. I think 99.9% of the people that are not somehow mentally compromised would say, what is this emergency exactly? So it seems like a pretty straightforward case. It's taken a while to go through the court, went up to the appeals court, which then ruled that they are illegal. And as you said, this is now already being appealed to the Supreme Court. I'm pretty certain they will hear the case. What they will decide, obviously TBD. But yes, if it happens, something like, I think it's close to 70% of all the tariffs would be taken off, and presumably the administration would have to refund that money, which at this point is north of, despite Trump saying we've collected trillions of dollars, the number is actually about 200 billion.
Still not nothing. And now, do you have a sense? I don't have a great sense. I would think something appealed to the Supreme Court would take a fair bit of time, but I guess there's an expediency to certain things, particularly if asked by the U.S. president. Do you have a sense of timing for a decision like this?
I've seen some pretty mixed things. I would say generally, the things that tend to get expedited has to do with whether or not there is perceived harm or major influence going on that a delay would cause a delay, or there's some other process that would take quite a lot of analysis. Again, to me, this seems about as straightforward as possible because it's a very simple law. It's very straightforward. You could have a lot of conversation about exactly what it means. So most people seem to think this will get decided in mid-October. I'm not sure exactly, other than the Supreme Court schedule that dictates that, but they could do things if it was such an emergency outside of that schedule. So I think we're at least in for several more weeks, if not several more months of uncertainty. What retailers will end up doing given this, I guess you could argue if you could delay bringing in some product because you might be getting a lower tariff rate, you would do that. But that's,
I mean, we're talking Mother's
easier
Day
said
now,
than done.
right? I mean, retailers are starting to think about bringing in Mother's Day. I mean, they're particularly apparel folks, they're way ahead into next year.
Well, you're definitely ordering for many retailers. You're definitely into the period of placing orders for spring. You wouldn't typically be bringing in spring merchandise in October for the most part, but it's starting to bump up against spring planning for sure.
Right. Now, the other thing that kicked in last week is this massive tariff against India. You saw on not a political podcast, but geopolitically, you saw the meeting of the three,
right?
The three big, China, India, and Russia meeting and holding hands and sharing, warm thoughts with each other
And everybody loves a parade, of course. They put on a pretty nice parade.
but not leaving their DNA behind in any shape, way, or form. Um, but he's North Korean wackiness. But what do we make of this India thing? I thought it was going to be turnover, but there's a lot of categories of business that comes in from India. What are you hearing?
It's surprising. If you've listened to our episode with Ken Pilot over the summer, one of the, not to call Ken out on a bad prediction, because I thought it was a great prediction, he really thought that India was going to be one of the players that would, the partnership with the US and India would really be one where the
Most
tariff rates
favored.
were quite
Mm-hmm.
low, with India being kind of a good alternative to China, really, and other places as well. And I would have absolutely thought that that would be the case. But now we're in a situation where India is, at least currently, being treated, in the same kind of general vicinity as China. So it's quite interesting. It's wrapped up, I think, in a lot of egos. So I don't know where this is. I mean, it seems really hard for me to believe that it's going to stick at such a high rate. But the more that Modi is cozying up to Putin and Xi and continuing to ship oil to Russia and these kinds of things, who the heck knows? But that's another, I think, surprising twist in this, which also adds a lot of uncertainty to the supply chain and just in general, where are some of these companies going to source this product? It's not, most of this stuff's not coming to the U.S.
Let's talk. Let's talk in Latin for a little bit. De minimis. So a big
Yes,
move. It's kind of one of those esoteric things that not everybody knew all that much about 2 years ago. I knew a
right.
lot about it because I've been on de minimis files for 10 years here in Canada. But boy, it's starting to shake through. We saw it in some talk about results, and now it's the end of an era. Talk about the de minimis and then the red tape that it just takes to get things shipped into America now. The Europeans have stopped shipping. Talk about what's your impression of all this?
Yeah, there's a couple things going on here. So, just for as a reminder to people, de minimis, the really kind of two major things is you get to avoid duties on products that are coming into the U.S. of value less than $800. It was raised to $800 years ago. It was $200, but
Mm-hmm.
also they're subject to less inspection and quality control and those kinds of things. So originally, I think what Trump was trying to do was really go at China because a lot of Chinese product was coming in, Temu and Shein famously, but plenty of other Chinese products was coming in under this rule and avoiding tariffs, and also there were safety concerns, as I mentioned. So the Chinese thing already went into effect, and China is responsible for probably close to 60% of the products that come into the country under de minimis, or previously it was as high as 60%. And then the rest of the change was supposed to go into effect in July of 2027. And for reasons that are unclear, really, other than he thinks that tariffs are going to solve some revenue gap, I guess, it was accelerated. And basically, people were given about 30 days to try to adjust. So the short term impact it's created a lot of pandemonium because the shippers, like DHL and others in Europe, were not prepared to deal with the paperwork and handle this. So, as you mentioned, in some cases, some countries have just cut off postal shipments to the United States, which seems pretty crazy in this day and
Right.
age.
Package shipments. I also heard, by the way, from some of those shippers that the rules and all the necessary things from America weren't in place for them to even understand or use. So it was not just we don't understand it. It was like there's not rules in place we
Yeah.
can figure out.
Yeah,
Right.
there's a tremendous amount of chaos. So
Mhm.
that we'll see how quickly that gets resolved. But I think we're absolutely looking at several weeks of reduction in shipments, even if people were willing to pay the extra. But from a business standpoint, if that gets sorted out, there's still quite a lot of impact potentially, or not potentially. I guess it remains to be seen how substantial it is because there are lots of small businesses that are importing products from outside the country in these small quantities. They're not going to possibly be able to. It makes no sense for them to buy in the quantities that would allow them to avoid this. You've got Etsy, eBay, a lot of those creators, of course, sending $100, $200
Sure.
type items. But you also have some major businesses. I thought that was really interesting and surprising, in fact, that Tapestry called out on their earnings call that 13 to 14% of all the products that they import come in under the de minimis level. Not quite sure why it's high, but they specifically called that out in their earnings, that having to pay these duties now, as well as just deal with the complexities we were just talking about, is going to be a bit of hit to their earnings, in addition to other tariff things that have nothing to do with the
Yep.
$800
Yeah.
level. And I think Lululemon also has talked about this. So it's not. Mostly what gets talked about, I think, is the impact on the small businesses. Or, for example, if you have friends or family that live in Germany, they send you a Christmas gift, it's suddenly going to get a lot more expensive.
If
Or
and
if you,
take 2 months, because they're bound to be. I mean, the rationale of de minimis is, grandma can send you a gift, and we don't need to touch it. It can just flow through, and there's
right.
some, just a nice flow of it was never meant to be used, though, by businesses in the way that it's been used. So
Yes.
I think that's fair. And in fact, I was talking to a retailer today that said, this is going to create a tailwind for my stores. I have mall-based stores in America, and this shuts down a lot of stuff that was competing with me. And frankly, on an unlevel playing field, I got to pay
Right.
tax on my stuff. So
Yeah.
there's a bit of a tailwind for some
Yeah.
retailers as well. So it's a very very complex but very interesting phenomenon.
Yeah. So, yeah, there's just a lot going on. I mean, probably can move on to non-tariff related things, other than to say, I guess the last thing I was just going to touch on outside of de minimis and the legal challenges is we continue to get shipping information, and it's just amazing the volatility of shipments
Mhm.
that are coming in. People trying to beat the tariffs went up, then they kind of went down again. July, it looks like they went up again because some of the higher tariffs were about to hit. So it, which also has impacts on reported GDP. It's all sorts of just crazy stuff that makes it really difficult to sense what the inventory situation is going to look like going into the holidays, as well as what this is all going to cost consumers and or the retailers.
You and I have talked about the impact of consumer confidence or low consumer confidence, and you've often said that there's not necessarily a correlation between low consumer confidence and spending in the retail sector, but we do see consumer confidence slipping. So, do you think there'll be some longer term impacts from the news we're hearing this week?
Well, there's a few things going on. Maybe I'll tie this into what's going on in the job market. So yes, consumer confidence has moved down again. It's not that there's no correlation. There's just a relatively weak correlation or a lag. But consumer confidence had bounced back a bit post the Liberation Day, and now it's moving in the other direction. I think it is tied to both the fact that inflation is not moving down and appears to be ticking up a little
Mm.
bit. But there's also what's going on in the job market. And just this morning, as we're recording this, the US reported basically the weakest job market since COVID. Unemployment's actually, it did move up, but it's not moving up very much. And there's this kind of weird thing, well, maybe it's not weird, maybe it's to be expected, is that the labor supply in the US is down. Now, a lot of this is a function of immigration basically being close to zero,
Yep.
as well as people, quote unquote, self deporting because
Hmm.
of the fear of getting rounded up by ICE. But there's also less labor participation generally. I'm not quite sure what that's about. It could be because people aren't confident they can get a job, so they've stopped looking. So anyway, it's pretty clear that the job market is weakening meaningfully. But because of the supply being down, you're not necessarily going to see the unemployment number go up a lot. The other thing that happened this morning, which I think will be interesting to see what effect it has on the labor supply going forward, is as these ICE raids continue to go up, that's causing people to not go to the construction sites or whatever. But today there was the
Or
largest.
Hyundai plans.
Well, yeah, that's the thing I was going to mention. The largest raid of a corporate facility ever was this morning. Something like 465, 475 people were rounded up at this Hyundai plant. It's not been the case generally that immigration raids would take place in these large corporate facilities. And so that could have a chilling effect, which of course
Mm.
is what some people are trying to accomplish. But the impact on retail potentially, or the economy more broadly, is people not going to work. And I don't know that Hyundai is going to be able to turn around and find 475 people to fill those jobs quickly. Or if they can, they're probably going to have to raise the rates. So that's just starting to make this concern about labor rates being a driver of inflation going up a little bit more present.
Not to connect dots that maybe shouldn't be connected, but I don't think it's a coincidence that there was a sit down in the White House with the South Korean prime minister that didn't go so well, and now we have a raid on a South Korean factory. So politics
Coincidence?
and
I
business.
don't think so.
Well,
Yes.
very very interesting. So let's move on to earnings, and let's talk about what you're seeing. There's a batch of earnings, too many to go through, but any trends you're picking up?
Well, very quickly, this is a continuing trend, so I won't spend too much time on it. But I think I hate to say bifurcation, but I will. The bifurcation between results where we have quite a few retailers that, for the most part, have been doing well for the last couple of years, maybe longer, keep doing well. Abercrombie and Fitch, Ulta, On, Dick's Sporting Goods. I mean, a number of the players that we often talk about putting up pretty solid numbers. And then some of the other players that have struggled continuing to post poor numbers, or at least not so great numbers. The one thing I wanted to call out in particular was really these turnaround stories. We talked about that last week in our peek around the corner, was starting to look at, or wanting to look at, what some of these turnaround stories like
Mm-hmm.
Gap, Macy's, Victoria's Secret are looking like. And what was interesting to me is the three retailers I just mentioned, Gap, Macy's, Victoria's Secret, Wall Street responded pretty well to what I think were objectively not very good results. So, as I often say, better is not the same as good, or the tyranny of low expectations or something going on here. But for example, I'll just talk about Macy's really quickly, if only because I wrote a piece in
Yeah.
Forbes about this, and I've actually taken a fair amount of heat about my being too negative about Macy's. And I really do hope that Macy's will be able to execute a turnaround. And I think they've absolutely made some progress. But when you have basically flat sales, when the overall economy and the apparel market in particular is up 4 or 5%, that's not exactly great. The other thing is that Macy's has been closing unproductive stores. So it turns out if you take the lower part of the average out, your average goes up. I'm sorry, listeners. You were
Denominator,
probably told
numerator.
there would be no math here. But also, and I just use this Dallas example, here in Dallas, and I don't know how widespread this is, but there are two of these reimagined stores. So these are the 125 stores that are getting disproportionate investment and some new strategies. In between is a Macy's store that closed. So last year or earlier this year. So there has to be quite a bit of movement to the two stores that are staying open, which are literally 10 minutes away from the store that closed. So I imagine this is happening as well. So it's hard to completely make sense of it. You can definitely see some progress, but it is not very significant. And in fact, the profitability on the retail side is going down. So hopefully this is just a little bit of noise here as they're working through some of these investments, but it's very hard to look at the results and say the stock deserved to be up by 25% or whatever happened last week.
Now, we do talk about the stock market sometimes. You often do say, stock market doesn't tell us everything or what we need to know
Right.
necessarily. But American Eagle has had some weirdness. Talk about that. What's going on there?
Well, as far as I could tell, all they said was that we're going to continue with the Sydney Sweeney campaign, despite all the controversy, which I think is, if they think it's working for them, is to ignore the naysayers and keep going.
Shout out to
But they
Craig
didn't
Brommer.
report it. But they
Shout out
didn't
to
report a
Craig.
very good quarter. So, so I guess people like Sydney Sweeney because the stock went up a lot, but the results were pretty mediocre.
Now, what else? Let's do a roundup of that. Let's do a roundup of that. Can't talk. Let's do a roundup on that with ANF and Ulta and On and DSG. Any thoughts?
I would. We're really long. I think I'd skip that.
All right.
Yeah.
You want to talk about Return of Bed Bath and Beyond?
Yeah. But these two will be fast.
Okay. So back from the dead, or near dead, or living dead, or walking dead, Bed Bath and Beyond. Talk about it.
Well, folks may recall that Bed Bath & Beyond shut down a couple years ago, basically got bought by Overstock, bunch of rebranding, bunch of merging. It's very kind of complicated corporate story. But the net of this is that Bed Bath & Beyond is back with a new store. It's called Bath & Beyond Home. Probably two important things. One is that much smaller stores, the one that they just opened a couple of weeks ago in Nashville. So this happened during the summer. We didn't quite get to it last week. Only about 8,000 square feet. So that would be quite a bit smaller than the typical Bed Bath & Beyond store. And because they're now part of this corporate group that includes Kirkland Home, not to be confused with the Kirkland brand at Costco,
Very confused. Very confused.
the product mix has got some more home furnishings. So still some of the things that we would expect from the old Bed Bath & Beyond, but starting to move in or move a little bit of furniture in. So it's I haven't seen this store. I looked at some videos. Seems a little bit like what a guy used to work for called the Dog's Breakfast, if you get that reference. And whether they can really have powerful offerings across so many home categories in an 8,000 square foot store, I guess we'll see. But they have said that they expect to open as many as 300 stores in 2 years, which on the one hand sounds kind of crazy when you have one store to ramp up that fast. I think you would want to go a little bit more slower to make sure it works. I'm also a little bit skeptical that the company has the balance sheet to do that. But of course, they have a ton of data from having had whatever they had, 1,000 plus stores in the US to be able to understand which trade areas might work for them. So we'll see how aggressive they get with that.
You know, one of my favorite words in the English dictionary is haboob, a big sandstorm. Just what happened, one of those in Phoenix a couple of weeks ago. And it feels like there's a haboob coming for holiday. PwC is talking about some softness in the holiday numbers. Talk about it.
Well, I have to say, as I said on LinkedIn, some people may say it, there is no way, I would be willing to bet quite a lot of money, there is no way this prediction is correct. Pricewaterhouse did a survey, said that shopping for the holiday in the US will drop by 5% year over year. I would be willing to bet that that number will be between 3 and 5% positive. Why do I say that? Is because that has been true every year except during the COVID year and I think the financial crisis. So, as our friend Brendan Witcher, I think even said on our podcast, Brendan Witcher from Forrester, somehow or other, people always find a way to spend for the holidays. So I don't put much more reliability in the survey. Now, whether the holiday will be comparatively weaker to last year, I would be willing to bet that will be true. But some of these, there are a lot of these surveys, nothing against PwC because they do plenty of good work, but there are a lot of these surveys that often predict, that take what consumers say they're going to do. And maybe this is a little bit like the consumer confidence thing, that what people say is not necessarily a good indication of future behavior. So barring a pandemic, which, with Robert F. Kennedy running the Health and Human Services here is a much greater possibility than I would have said, or some World War III or whatever, in which case I don't think anybody's going to be worrying about what they're putting under their tree.
Or what they're calling the Defense Department. Yeah.
Yes.
Interesting days. All right. Well, let's leave it there. Let's get to our fantastic interview on the future of luxury retail with Amit from Chalhoub Group and Stacie from Tod's. We are back. Steve, I think the folk, Ben and the team at Shop Talk put a nice event together and great insights from the both of them. Any quick comments, observations? You're very close. You spent a lot of time in the luxury business. Any comments on what either of them said that struck you particularly?
Well, I think one indication, which we've seen a lot and talked about really a little bit at the top, is that even in a market that's pretty challenging, there are winners because the brands are that powerful. We've talked previously about Hermes and Prada and others. So you can certainly find brands like Tod's, which are well positioned, have their own definition that can do well. Chalhoub is just a really interesting company in terms of the mix of the things they do. But of course, they're mostly in markets that are very strong markets for luxury and aren't necessarily having the same kind of economic headwinds that we see in North America or Europe and UK, et cetera. So one thing I just kind of related to this that I saw is that HSBC upgraded a number of luxury industry stocks just this past week, LVMH and Kering in particular, because they anticipate both that the Chinese market, which of course is a big market for many of these mega conglomerates, will pick back up, and that also the U.S. market, which has really been pretty tough for most of luxury this year, that downturn will be short lived. I'm a little bit more skeptical of that, but it's definitely a tougher market for luxury in general in many parts of the world. But there are people that are able to stand out from the pack.
We wanted to now get to our new segment. Last episode, we called it This Goes to 11, which pretty much no one gets. But so we've rebranded it or branded it what it was originally, which was
Kind of like Cracker Barrel. We stuck with the new branding for
exactly.
one episode.
We rolled that back. One episode, we rolled that back. What was particularly remarkable in the news this week? You go first.
Well, this isn't really like a hardcore retail story, but we've talked about the GLP-1 type drugs and how impactful they can be really broadly with people losing all sorts of weight. That could drive, well, I think is driving, replacing your, if you lose 30, 40, 50 pounds, you need all new clothing, right? But it also affects CPG companies and other things outside of traditional retail or the restaurant business, portion size, all that kind of stuff. But even though lots of people, I think in the US, something like 11% of the population has been on a GLP-1 type drug in the past year, part of the issue is price, and part of the issue is people don't like needles, or many people don't like needles. So there is a GLP-1 drug on the horizon that's made it through the first level of clearance. So I think that's pretty exciting.
In a
And
pill
pretty
format, right?
impactful
Something
in a
you
pill
can,
form. I'm sorry, maybe I
right,
skipped
right.
over that. Yeah, no, a pill rather than injectable. So I think that could be a real unlock for the next level of volume. Don't think we know much about the pricing, so it may not be dramatically less expensive. But I think in terms of people's squeamishness about injecting themselves, that could really expand the possibility for individuals, and then of course the ripple effects throughout the economy.
What I've been looking at is Nano Banana. Have you heard of this? It's
I've heard of it. Yeah, that's the Gemini
right.
whatever version from Google.
That's right. It's the Gemini image manipulation. I actually sent you a couple just before the show of you and I on the stage from Commerce Next. I don't know if you looked at them, but I did 4 or 5 versions, one of which you're on my shoulders and we're dancing. And it's hard. And it's hard to see that that's not a real picture. A merchant, actually, a retailer brought this up to me today, literally, and said they're very excited. They've already started using it. Let's see this model in different hair color. Let's see it in 30 different hair colors. Let's see it in 30 different fits. It's image manipulation that is pretty seamless. And this one retailer is very excited about it. And this is a retailer who's very on trend and has seen both useless things that have a lot of buzz and very useful things. So Nano Banana could be, we talk about something else next week, but right now, check it out. It's part of Gemini, as you said, Google's AI tool. All right, we're going to finish up with this another segment called On the Radar, kind of a peek around the corner, what we're thinking about for the next couple of weeks. What are you thinking about?
I got a few things. I mean, obviously, we talk pretty much every episode, it seems, about kind of macroeconomic stuff, tariffs, et cetera. In the U.S., anyway, we've got the Federal Reserve meeting and making an interest rate decision, and a lot of interest, of course, no pun intended, in what happens there, whether they will take interest rates down 25 basis points, 50 basis points, whether they may not do it. What that all signals is that because they're worried about the economy slowing down? Is it because it's overdue and inflation's really not a concern? So there's lots of commentary, I think, over the next 10 days or whatever it will be before that decision. The other thing that's definitely on the horizon coming up really, really quickly is, and we seem like in the US we're here every few months, is the possibility of a government shutdown. And that could, if that happens, of course, could cause a fair amount of chaos. Not that we need any more chaos in this country right now. And related to that, just in general, the possibilities of escalation of more things. We talked about the ICE raids as they're increasing. The Trump administration is way behind the numbers of where they wanted to be. I also think they're very happy to distract from the jobs numbers and Epstein and all that kind of stuff. So I think that just may lead to more kind of wag the dog, just to use another old reference that most people won't get. And military going to Chicago, military potentially going to other cities. So there's a lot of protest activity that's really escalating and being
Tends
planned.
to
So
suppress shopping and going out for dinner. I mean,
yeah.
you were in Washington and you commented, we were commenting, it's like, doesn't feel like a great place to go out to dinner when you're looking at somebody who's
No,
automatic
I think
car buying.
restaurant reservation. I don't know if they still are. I haven't seen a recent number, but I think restaurant reservations when that started were down 30 or 40%. So, yeah, it can be significant. Another thing I'm looking at, and we've of course touched on this multiple times, it's related to the broader luxury story, which is what's going on at Saks Global. I actually had an opportunity because I was down in Houston and Austin last weekend to get into a few of the Saks and Neiman Marcus stores. So there's an Neiman Marcus store in Austin in the Domain. I thought it looked really good. I didn't sense that there were any issues with inventory. Of course, that's been one of the topics we've touched on a bunch of times, that vendors aren't shipping. That was not evident, or they were hiding it very well. One of the real unique, or not terribly unique, but one thing that you can only see, at least in the state of Texas, is a Neiman Marcus and Saks store in the same mall, the Houston Galleria, which is a humongous mall, like ridiculously large. I think by square footage, it's one of the top 5 malls in the country. And both stores were busy. Both stores looked pretty good. The Neiman Marcus store looks pretty dated. The Saks store felt much more contemporary and current and a real buzz. But I didn't, again, see, now these are big volume stores, probably, I don't know, in terms of where it ranks in the Saks, I'm guessing a top 5 Saks store. I'm pretty sure it's a top 5 Neiman Marcus store. So there's a lot of volume there. So if they're distorting inventory, that would be the place to distort it to. So, but really the question is, they're very short on cash. There still are complaints about vendors not getting paid. And just in general, the cash pressures. One thing I should have mentioned going back to the Macy's story was that Macy's Inc. Owns Bloomingdale's, and Bloomingdale's was demonstrably a strong quarter. Their comp store sales were up, I think, about 5%. And there's been some reporting of both Bloomingdale's and Nordstrom benefiting from some of the turmoil at Saks and Neiman Marcus. So I don't, Bloomingdale's didn't call that out specifically, but I would think that they benefited a little bit from there. So anyway, we just need to keep seeing what's going on with the refinancing and just general the struggles at Saks and Neiman Marcus. Then 2 other just real quick things I'm looking at. The TikTok, whatever you would call it, TikTok being kicked out of the US, which has been kicked down the road now 3 times or something. I can't even remember anymore. The new review date, I believe, is September 17th, I think. So in theory, TikTok could be out of business in the US on September 17th. Once again, I doubt it. But so that'll likely get kicked down the road again. And then really the last big retailer that I'm particularly interested in hearing what they're going to say, though I think we pretty much know what they're going to say, is Costco, the 3rd biggest retailer in North America. They are on a little bit different schedule. They have a middle of the month end of quarter. I'm not sure why that is, but anyway, that causes them to report a bit later than a bunch of the folks we've talked about the last 2 weeks. They report monthly comp store sales. So from a sales standpoint, we pretty much know that their comp store sales are going to be up 6.5%. Their total sales will probably be up closer to 8% because of the store openings they've got going on and their growth in digital. How they do profit-wise, my guess is going to be pretty darn good. They're firing on all cylinders, and the flight to value, I think, is really benefiting them. But anyway, we'll see what they have to say. Probably more interesting thing is what they say about the balance of the year rather than what I think will be a very strong quarter.
For me, I'm looking forward to going to the grand opening of Les Maisons Simon, which is a department store in CF Eaton Centre, which is Canada's most trafficked mall. About 50 million people go through that mall, and they're taking the place of Nordstrom that was there. And it's the grand opening. I've seen some early renderings of it's beautiful. Looks like a beautiful store. They've done some wonderful architecture. So I'm looking forward to seeing that. That's 2 stores in the Toronto area that they've taken over, one in Yorkdale, one in Eaton Centre, both of which have taken over from vastly underperforming Nordstrom stores. So we wish Simons, the folks at Simons, Bernard Leblanc, very well. And that's what I'm looking at. All right, well, let's leave it there. Great episode. We'll be back next week. We've just got a roster of fantastic guests coming up. We've been working super hard to line up the most interesting people in retail. So stay tuned, and thanks for tuning in.